Hola, buenos días a todos y bienvenidos a la primera entrevista que vamos a hacer a uno de los gestores que tenemos en la cartera de Smart Bolsa. Hemos elegido empezar con una gestora que es típica en lo que buscamos cuando invertimos en gestores activos que tratan de obtener rentabilidades superiores a los fondos indexados o a los ETFs y tengo el placer hoy de tener a una de las cogestoras y además accionista de la gestora que se llama Avaron. Este es el nombre de la gestora. Están basados en Estonia, tienen presencia en Polonia y son especialistas en gestionar bolsa emergente europea. Esa es su especialización. Es lo único que hacen y, y pensamos que es un activo nicho, no hay, digamos, no es un tamaño, los mercados bursátiles de estos países no son especialmente grandes, pero pensamos que es muy interesante, es una clase de activo muy interesante, ahora comentaremos por qué, y este gestor en particular pensamos que puede maximizar la rentabilidad que se puede obtener en estos mercados. Antes de comenzar las preguntas con Kristel, por cierto, la entrevista la vamos a hacer en inglés, pero por supuesto luego la vamos a traducir y vamos a proporcionar subtítulos para que todo el mundo la pueda seguir. Eh, Quería comentaros justo lo que estábamos hablando de la clase de activo, la clase de activo que es emergentes europeos. Eh, Pensamos que es una clase de activo muy interesante porque las economías que hay detrás, economías como Polonia, como Hungría, como Rumanía, como la propia países más pequeños de los bálticos, como Estonia, Lituania, son economías muy interesantes. De hecho, es que nos están superando. Nos están superando, ya hay varios casos. Creo que eran Polonia, Hungría y Estonia, que nos han superado en renta per cápita a los españoles. Y Polonia, creo que algún otro van cerrando, o los demás van cerrando el hueco rápido. Y así que esto del fontanero polaco, por ejemplo, ¿verdad? Que venía a ganarse la vida en España, pues ya no los vemos. Y es porque en sus países pues no hay paro, no es como España, no hay paro, son economías mucho más equilibradas. Además de tener poco paro, tienen poca deuda y su crecimiento es mucho más sano que el crecimiento, desgraciadamente, de España y algunos países del sur de Europa, como Italia, ¿no? También, que son crecimientos pues, menos saludables. Por tanto, creo que es una clase de activo que es muy interesante, que nosotros tenemos en cartera desde hace tiempo y lo que queremos ahora es que, bueno, que la propia gestora, la propia especialista y socia de Avaron nos cuente un poquito pues cómo gestionan el fondo, pues algunas de las acciones que tienen en cartera, cómo ven la economía en la zona bueno, un poco proyecciones, porque pensamos que esto va a continuar, y ellos creo que también. Y, y bueno, pues vamos a ir adelante. Lo que voy a hacer es que ahora voy a cambiar a inglés. Voy a cambiar a inglés y voy a empezar con la primera pregunta. Kristel, we are switching to English after my long intro about the economy in the region, the economies in the region, and of course your fund, your asset manager company. So I'm really happy to have you here today, and I want you to tell our watchers if you can briefly introduce yourself and the company Avaron, the fund manager that runs the European Emerging Equity Strategy.
Hello, everyone. Thank you for having me. So briefly about myself, I started my career in investments and finance almost 30 years ago. So first, after having worked as an analyst and heading the sales and trading desk and investment management team for 10 years, in 2007, I actually had with a few colleagues a dream to set up my own asset management company. And this is how actually Avaron got started back in 2007. So we have been business in emerging Europe equities now for more than 18 years. And at Avaron, we focus on emerging Europe region. Specifically, we are doing stock picking among public equities in the region. And as you already said in Spanish, our region is very, very large. It's all the countries that joined the European Union since 2004. So coming on the map, it's the Baltic countries, Poland, Hungary, Czech Republic, Slovakia, Slovenia. These countries joined the European Union in 2004. 2007 joiners, Bulgaria, Romania, and then later on also Croatia. We also invest into Turkey, which is not part of the European Union, but also into Greece, which entered emerging Europe after the great financial crisis. And we also follow the ex-Yugoslavian countries that are not part of the European Union yet, but we are currently not invested in these due to very low liquidity.
Excellent. Thank you for the intro and congratulations, because I think that decision you made in 2007 was a really good decision. So I spoke a little bit about the economy. As you say, it's a broad region, but I think that some of the main countries are doing really well. So what is your current view of, because we know the past, right? But what is your current view of the main economies in the region, and how you see the medium-term prospects? Can you see these countries performing better than the Western Europe as they have done on average, or what risks you see there? That would be very interesting, I think, for our watchers.
Mm-hmm. So for this year, emerging Europe as a region is expected to grow around 3%, and also next year the same. And currently, the main drivers of the growth in our part of the world are, of course, rising investments. You probably have also heard that on top of Germany making huge investments, or has a huge plan of making investments, also Poland came out, or Polish government came out with its huge investment plan. So investments are clearly driving the growth. But also, I would say today the steady consumer spending is very, very important part of the growth. And on top of this, emerging Europe growth is actually fueled by the restart of European Union new budgeting period projects. So as you probably know, the Spain is also net gainer from the European Union money, as the living standard, or let's say salaries in emerging Europe, are much lower compared to the European Union average than in most countries. Then most countries are very strong net benefiters of the European Union money. But these have been actually the main drivers of the region also for the past 10, 15, 20 years. But what we are actually now seeing in the region happening is that large European or old European manufacturing companies are doing nearshoring. What it means is that they are actually establishing new manufacturing capacity in Eastern Europe, not anymore in Asia. And there are two main reasons for that. So one is costs in Asia have risen. Also, to some extent, political risk has risen. But also the COVID crisis and also all the logistics problems that the companies have been having over the past 4 or 5 years have shown that it makes sense to actually produce your sub-products close to your customers and close to the region. So this nearshoring has shown very many good news in our part of the world. So overall, from the economic point of view, I would say emerging Europe is a leveraged play on old Europe. So if you believe that Germany is doing good, then you can basically leverage your German growth by investing into Eastern Europe.
Yeah, that's very interesting. That's very interesting. So, because I think it's also good to see what risk could be. I mean, we know some geopolitical risk with Russia and Ukrainian war. Maybe very very quick on that. I think that could be for risk. Also, you were saying that maybe there's not going to be so much money coming into in some of the countries because their standards of living have raised. I mean, just for our watchers to see what are the potential risks on a really good story, as you said. But it's always
Overall, I would say the biggest risk in Eastern Europe is actually if Germany as an economy were to slow down very significantly.
yeah,
Because we are, in that sense, if you take a look at, for example, the tariffs that Trump is making on Europe, these tariffs do not directly influence us a lot. They do not put our growth at lower levels, etc. But they work a lot on Germany. And
yeah.
if Germany, because of that, were to slow down, then our part of the world also slows down. So we are, in that sense, subcontractors to these larger markets, Germany, France, also in the Baltics, for example, Scandinavia, Sweden is a very important partner. So this is one risk, that if the bigger economies in Europe slow down, we also, to some extent, slow down. And of course, from an investment point of view or investor point of view, it's of course if the war in Ukraine were to basically last for the next 5-10 years, because what we are really today seeing, Eastern Europe is today trading at 40% discount to global emerging markets. This discount used to be at around 5-6% premium to around, let's say, 15-20% discount. And after the war broke out, basically this discount went to around 15-20% to more than 50%, because many institutional investors just ran away from Eastern Europe investments. Part of them have actually returned, but not all of them. And I think this discount is a very good reflector of overall investor sentiment. So typical Western European and let's say US, Canada investors are today not invested in emerging Europe. So if the war were to last for a long time, this would be also a risk to our part of the world in terms of valuation, not so much in terms of business.
Business, yeah, that's very interesting, very interesting. So could you maybe then tell us a little bit about what these stock markets look like? Yeah, what type of companies that are available for you to pick? I think that would be interesting for our watchers as well.
Mm-hmm. So we are investing in more than 10 different countries in the region. And the largest markets are actually Poland, Greece, and Turkey. These are the most liquid, and also they contain the largest number of listed companies. However, if you take a look at the very big companies, especially in Poland, they are owned or partly owned by government, and maybe not so let's say, dynamic. So what interests us more is basically companies with dynamic managements, which are growing faster, which are maybe more mid-sized companies. And these companies are very much overlooked by these ETFs that invest into the region, or bigger investors that invest into the region. And the smaller companies and maybe a bit less liquid markets mean that there are also inefficiencies. And as we are stock pickers, then this is what we are really looking for. So we've been following this region for more than 20 years. And we also have a large team. So we have 3 investment managers, and they are supported by 5 analysts. And in order to do actually stock picking in the region, you need a larger team, and you need to constantly visit the companies on the ground and talk to managements, basically. But Overall, I would say that this region is really, really dynamic. It's interesting, and I think from an investor's point of view, if you take a look at emerging Europe price earnings ratio, it is today 8. Price to book ratio is 1.1. So we are actually trading at a huge discount to old Europe, but also we're trading at a huge discount to emerging markets. And at the same time, when we are having this PE ratio of 8 on average, we are having similar return on equity, like in Western Europe and also in emerging markets, and we are having 2 times higher dividend yield. So this region today is really, I would say, neglected by institutional and international community, and mainly because of the war. So at some stage when the war comes to some kind of solution, I do not think that we will be seeing the unwinding of the conflict to before, let's say, to January 2022. It's going to be very difficult to see that. But if we will be seeing at least ceasefire, so we will be seeing some kind of movement towards peace, or Russia being defeated, then I think what we will be seeing is more and more investors coming back to our part of the world.
Thank you for that, Kristel. Very interesting asset class, as we were saying. Could you give maybe a couple of examples, on what stocks are your main, positions in the portfolio? Like a couple of good examples, so that our watchers can realize what type of companies, they are familiar with, as you can imagine, with the big US companies, some European companies. But I don't think majority of people know what type of companies there are there, and especially which ones you have in your portfolio. So maybe you can give us just 2 examples of companies that you have currently in your portfolio. That would be much appreciated.
Mm-hmm. Overall, I would say that if you take a look at where we are investing, our investment universe is about 300 companies. So there are more than 1,000 companies listed in our part of the world, and we have narrowed down this universe to around 300 companies in the region, and we are invested currently around, let's say, or during different phases, into 40 to 45 companies. The most interesting companies today, I would say, from our perspective, are actually in Poland, where we are seeing the growth accelerating, and this is why 33% of our portfolio today is in Poland. And as you probably know, also Poland is going to enter into the developed market index. And if that were to happen, then we will be seeing stronger inflows into the Polish market. So also we have very interesting smaller companies in Romania, actually, to some extent also in other Balkan countries, and in Slovenia, for example. One example I would actually bring is Polish LPP, which is a retailing company, has very strong management, is operating. It's like we can say our Zara of the world. So they've been growing very steadily. They are having strong trademarks. And if you take a look at overall what they are doing, they are a regional company. And what I like about LPP is that many companies in Eastern Europe, if you take a look at how Eastern Europe overall was developed, then we have strong share of strategic investors in the region. So this means that many companies are just local, focused on their own country. They are not regional. But what LPP has been able to do is it has become really a regional company in Eastern Europe. But there are, I would say, many smaller and mid-cap companies which we have around 3-4% positions in our fund, which are growing fast. And overall, we are today very much in cyclical companies. So consumer discretionary industrial companies, and they are mainly winning from the interest rate environment and also the accelerating growth in the region. And yes, it's smaller and mid-sized companies in Poland and the Balkans that are the most interesting.
Okay, that's very interesting. I think another interesting thing for our watchers would be, you mentioned before, like Turkey, yeah, Turkey, which is a large country, large economy, and one of the largest markets in the region. I know because I've been invested, in a smart Bolsa. We have been invested in your fund now for a good while, and we know you for years, and we have enjoyed your performance. Of course, I will talk about that at the end, because I think it's important for the readers to know that your performance has been very good in both absolute and relative terms, despite the discounts that you were mentioning before. But going back to Turkey, I think that that's an interesting market, because it's a market that we know that the currency does very wild things up, down, the stock market as well. I think I've seen sometimes with a 3-digit growth. So when it goes up as well, it can go up big time, as we say. But you've always been reluctant. Of course, you are prudent approach to managing the fund, but I've seen finally you have started to take some positions in some Turkish companies, which it could be maybe a good opportunity. I'm sure if you have done that, is because you believe Turkey might start being a good opportunity. So tell us a little bit about your strategy with Turkey, and why you think now is maybe it starts to be a time where maybe some exposure to Turkey makes sense.
Mm-hmm. So we are old school investors. Old school meaning that we like to analyze managements, visit them. We make our own Excel models and then basically work out our own target prices. And in most of Eastern European countries, or I can say in all, we are, I would say, long-term investors. Where we are usually holding positions 3 to 5 years. In some companies, we have been from the start of the fund, because their earnings have been growing nicely, management has been doing the good work, and we have been just enjoying the ride. Turkey, from our standpoint, is actually the only market where we are, I would say, speculative and opportunistic investors.
Yeah.
And we trade that market. So we are not long-term holders of Turkey. We go in, we go out. So we last exited Turkey in 2023 in January, because if we take a look at how we value companies, then we build the macro risks and also the volatility of the currency into our target prices. And this was the moment when if you would buy a company in Poland or in Turkey, the upside was similar. But in Turkey's case, what we would expect is much higher upside in a stock, because macro risks, political risk, and also the volatility risk of the lira is so much higher.
Yeah.
Turkey was running already at that time huge inflation. So international investors were actually exiting, but for local investors, there was nothing to save their money. So what they did was they massively bought into local equities in Turkey. And this was the time when they bought the Turkish market to a similar level like all of our other markets. So Turkey was not trading at a discount. We sold all of our positions in Turkey. So mainly, I would say our main worry in Turkey is actually lira, because we think that lira, even at current levels, is maybe a bit overvalued. So, and there are certain political risks tied to that. So the lira overvaluation actually needs to build into our target prices and give us enough upside. Now that at the beginning of this year, then finally there was a crash in Turkey, and the market completely crashed, and we built up 5% position in Turkey. And during the past, I would say, 5-7 years, when we have been speculating on Turkey, we have only been doing that with export-driven companies. So we do not invest into banking sector. We do not invest into domestic demand-driven companies. Yes, Turkey has very young population. Overall, long-term, the upside in Turkish economy is very huge, but there is also significant risk involved. So today we are invested in 5 exporting companies in Turkey, and looking at closely at that, how the situation builds up. We probably at some stage would increase our holding to 10%, but Turkey would never be in our fund under this political, let's say, environment above 15%. So it would never be 20-30%, just because the macro risks are and also political risks are too large.
Okay, thank you for that. I think to wrap it up, I challenge you to tell us in 1 minute, not more than 1 minute, why Spanish investors should consider to invest, at least little allocation to emerging Europe equities.
Mm-hmm. So first, it's the growth. We grow faster on economic base compared to Western Europe. We have lower salary level, so there is a lot of catch up to do. And if you think today that you want to invest into developed Europe economy, invest part of it into Eastern Europe, because you are getting faster growth. Secondly, today valuations are cheap, and the whole war situation in that sense is already discounted in our valuations and in company share prices. So we are trading at 40% discount to global emerging markets. I think the fair discount would be around 10-15%, because we are less liquid. And third is that a large part of institutional investors are out of the region. And once the war situation clears up a bit, I think they will be starting to bit by bit come back to the region. So we will be seeing, let's say, constant supportive buying of the region. Some investors have actually asked, so how come you have war in Ukraine? Institutional investors are out of the region. How come Eastern Europe has outperformed Europe and also global emerging market equity price growth? And actually the answer is that companies' profit growths has actually been astonishing. So this outperformance currently has mainly come from outperformance of profit growth, basically. So company profits have been growing nicely. And fourth thing, which I think is maybe a bit more opportunistic, is that if Poland and also Greece enter into developed market category, then we will be seeing just technical exchange traded fund or ETF flows coming into the region, taking up the blue chip prices. And this is going to help the whole market at the end of the day.
That was more than 1 minute, but I think it was worth. So thank you very much, Kristel, for your time, and discover for us such an interest, for our watchers. We discovered this market a while ago, as I said, at the Smart Bolsa. So thank you, Kristel, for your time, and see you soon.
Thank you.
Bueno, pues esta ha sido la primera edición de entrevistas con algunos de los gestores activos que tenemos en la cartera del plan de pensiones y del fondo de inversión de Smart Bolsa. Y bueno, pues por mi parte, como resumen, creo que ha quedado claro. Es un mercado con crecimiento, que encima está barato respecto a Europa, respecto a los propios mercados emergentes, y con muy buenas historias detrás, con muy buenas, digamos, opciones, ¿no? Como mencionaba Kristel, pues hay sobre todo un par de cosas, como son el posible final de la guerra en Ucrania y la vuelta de determinados inversores institucionales y la posibilidad pues, que países como Polonia o Grecia entren en los mercados desarrollados, lo que traería mucho dinero de los probablemente de ETFs y esto repercutiría positivamente en los precios. Así que muy buena rentabilidad pasada para la estrategia y esperamos también que muy buena rentabilidad futura. Gracias y hasta la próxima.